Alright, gang, it's your boy Nature, aka Nature Gang. Alright, gang, so you can see price went from take profit 5. You see a push up from take profit 5, all the way from take profit 4 to take profit 5. Boom, and then we see a push back down to take profit 2. Nice little downtrend. Candlesticks are below this trend line. Price is making what? Lower lows and lower highs and lower lows and lower highs and lower lows. As I'll show you right here, I just want to break down this move, like this major move real fast. Price is making lower lows and lower highs and lower lows and lower highs and lower lows. Let us know we're in a downtrend, right? As we go back to our chart, it was in a downtrend, making lower lows and lower highs and lower lows and lower highs and lower lows. And we're doing entries. We're looking for entries. As this kind of not wraps it up for entries, we're going to be diving in more and more about entries. I gave you a lot of videos for your psychology already about entries. Just being impulsive. You have to really wait for the market to do this. As the market would have got you out, if you thought price was heading up, right here, you thought price was heading up. We see this major wick. We see this major wick from 1837 all the way down. From it started here, it opened down here 1829, then it went all the way down to 1821 before going all the way back up to 1837. We're closing back at 1830. And then we see a push up all the way up to take profit, above take profit 5, 1841. Then price shoots back down. It goes all the way down almost to like take profit 3, take profit 2, this take profit 2 area right here. It goes right almost to take profit 2 area. It goes past take profit 3 area. We see this crazy wick. And gold was moving crazy today. Crazy today. Take profit 2 right there. And I'll explain that too. I'll explain all of this. So price goes from take profit almost to take profit 2. This is take profit 2 area. So it did go to take profit 2 area. Then we see a pushback up past take profit 3 all the way up to take profit 4 and to take profit 5 before closing back at take profit 4 before going back up to take profit 5, and we didn't get a push up at take profit 6. Then once price goes to take profit 5 at 1841, it heads all the way back down to 1820. This take profit 2 area. All right, gang. Then after this, we see price go all the way from take profit 2 area all the way to take profit 7, from 1820 all the way to 1865. Depending on your lot size, this could have been 10 grand, 20 grand, couple thousand easily, from 1821 all the way up to 1865. And this was a crazy move. This was a crazy move. As price heading up, we're doing entries. We're looking for entries where to get in at. We had to stick to our trading strategy as price heads up to take profit 5, and then once we see price starting to head back down, making lower lows and lower highs, and making lower lows, making structure, letting us know we're in a downtrend. We would have got out this trade, as it took all these candlesticks represent 15-minute candlesticks from February 10th all the way to February 11th. It was in a nice little downtrend all the way down to take profit 2 area, from take profit 5 from 1842 to 1821. And I understand, you have to remain patient and calm and follow your trading strategy. Our trading strategy is to wait for price to go to its lowest point, and then we could have got in for an entry. Looking at candlestick patterns all day can be very overwhelming. That's why we use trend lines, Fibonacci, RSI, moving average. As you can really feel the real pressure as you're trading with a live trading account, and you're actually trading and with a live account, and you're trading with your live money. It can be very overwhelming, and a lot of factors play into live trading, when it comes to risking your real money, addition to the stress that builds up from, trading at 2 o'clock, 5 o'clock in the morning, all the way up to like, if you were swing trading this and day trading this all the way until, closing. damn near closing, this move didn't happen. It could be very, very stressful. So you have to keep a very positive mindset. Your psychology is key when it comes to trading. When it comes to being a full-time trader, trading in this market, your psychology is everything. You have to be in the right mindset. And if you're not in the right mindset and you're dealing with stress, you just need to step away from the market. It's okay, step away from the market and just come up and focus on your strategy before you get in for an entry, as you could have gotten at take profit 5 and rolled it all the way up to take profit 7 from 1835 to take profit 7. It still could have made a couple thousand, 2,000, 3,000, as price went all the way up to take profit 7. It's the highest point price been at now. It's 1865. So when you're in a live trade, it's a lot of, you start to feel the stress, and it can exhaust your psychology. It can exhaust your psychology, and you have to in your mind, and you could be exhausted, as looking at candlestick patterns every day, and it's a lot of pressure that comes when it comes to trading, and you have to be mindful of that. Step outside, get some sunshine, soak some energy in, go outside and get some fresh air, and try to get rid of this all that stress, as you can't have any stress when you come into this market. um so you have to analyze the market, and you can see, all right, we was in a downtrend from take profit 5 to take profit 2. um So first thing we want to do is analyze the market. Okay, we see what's in the downtrend from take profit 5 to take profit 2. Boom. And now we're looking for an entry. We use our Fibonacci tools, our trend line tools to help us decide where we will get in for entries for confirmation that we see this trend line. Let us know we're in a downtrend. This gives us confirmation that we're in a downtrend. Candlesticks are below this trend line. This helps us using our tools. We have our psychological levels on here. Take profit 2, take profit 3, take profit 4, take profit 5, take profit 6, and take profit 7. Like, these are our key levels. Once price goes past take profit 4, it'll go to take profit 5, take profit 6, and eventually take profit 7. So we know consolidation, using everything that we can to help us come up with solid confirmation before we even enter the market. We have to, draw our trend lines and see what is price doing. This is, everything. This all has to do with your psychology, as Forex has to do with your psychology. Like, your psychology is everything. This is one of the main reasons why people are losing, is because of their psychology and your entries. Entries, as we're going over entries, you need to understand entries better in order to trade and become profitable in this market. So we're going to go over entries, so you can become profitable, as wherever you get in for an entry will determine if you're going to make a lot of money or if you're potentially going to lose a lot of money. So how much so where you get in for entries is going to determine a lot of how much money you're going to make in this market. So extremely important that we go over entries again. As if you would have got in at the top of this uptrend right here, price heads back down, boom, from take profit 5 all the way back to take profit 2. You had got in for an entry right here for a buy, like right here, at the top where you don't want to get in at. You want to get in at the bottom. Say you would have got in for a trade right here for a trade, call this trade 1, and we're going to call this buy. Okay. Trade 1, buy, right? Trade 1, buy. Say we got in for an entry right here, as you see price was going up. You see, price was in the uptrend. I'm not going to go back too far, but we know price was in the uptrend. Price goes all the way up to take profit 5. It didn't get a push above take profit 6. It actually rejected off of take profit 5 area. It didn't go to take profit 6